Good afternoon, everyone. Today we are talking about data analysis of exchange rates of GBP and the USD against MYR. We are Group 2. Our group member is Sun Xiaolu, Chen Letian, Gao Suyu, Guan Yanru, Zhang Chenxi. Now I will introduce background of country.
U.S. economy is performing strongly with stable GDP growth, controlled inflation, and moderate unemployment. The Fed's monetary policy, characterized by regular interest rate adjustments and quantitative easing measures, plays a key role in shaping the strength of the U.S. dollar USD. Major sectors such as technology and finance drive economic activity, while trade dynamics with major partners such as China and the European Union affect the U.S. dollar exchange rate. In contrast, facing economic uncertainty post-Brexit, the Bank of England navigated its interest rate decision to stabilize the British pound GBP. Despite the challenges, the UK maintains important trade links with Europe and the United States, which affects the exchange rate of the British pound. Political developments and global economic trends have further influenced the relationship between the US dollar and the British pound, highlighting the complex dynamics of the international currency market.
For data types there have the date, the exchange rate of USD and GBP. Given the data, the following data analysis methods can be applied. Time series analysis, summary statistics, compute mean, median, standard deviation, and other summary statistics for the USD and GBP exchange rates. Distribution analysis. Distribution analysis analyze the distribution of exchange rates using histograms and density plots. Key insights: the GBP exchange rate has a higher mean and maximum value compared to the USD. The standard deviation is similar for both currencies, indicating comparable volatility. US dollar USD to MYR exchange rate scenario. Between 6 years, the exchange rate of the US dollar to the MYR remains generally stable with slight fluctuations. There are notable peaks during last 2 years, which may be related to global economic events or specific policy changes. Pound sterling GBP to MYR exchange rate scenario. The pound sterling to MYR exchange rate shows a similar stabilizing trend between low years, but with slightly more volatility. Again, there are significant fluctuations and peaks between last 2 years.
The pandemic has had a significant impact on the global economy, leading to a decline in GDP and a rise in unemployment. Especially in the service sector, the government has responded to the slowdown with measures such as fiscal stimulus and interest rate cuts. While accelerating digital transformation, the pandemic has exacerbated social inequality, exposed the vulnerability of global supply chains, and promoted supply chain diversification and localization. These changes will continue to shape future economic policies and international relations.
Let's look at the currency situation. United States dollar, USD. Factors such as the COVID-19 epidemic, the Federal Reserve's monetary easing policy, and the political situation in the United States, including changes in government and policy, affect the stability of the United States dollar. For example, changes in fiscal and international trade policies, political instability, or controversial events can affect the exchange rate of the United States dollar. Pound sterling, GBP. Changes in the GBP exchange rate during the epidemic because of the UK's embargo measures and economic stimulus, Brexit, and other political events.
Diversification, given the volatility in USD and GBP exchange rates. Investors might mitigate risk by diversifying their currency holdings across both currencies. Long-term investments in stable periods of lower volatility, as suggested by moving averages, can offer safer entry points for long-term currency investments during times of economic stability or strength. Forex trading. Experienced traders might leverage the similar volatility in USD and GBP for active strategies like swing trading or arbitrage to capitalize on potential gain. Geopolitical uncertainty has caused significant volatility in the world currency market. with both the US dollar and British pound experiencing similar fluctuations. This impacts investment strategies and economic policies, prompting investors to diversify and hedge risks with financial instruments. While governments and central banks may intervene in money markets or adjust interest rates to stabilize exchange rates and economic conditions,